Hi there, traders. This is Brad Gilbert with a special presentation for the FOMC preview. Now, this is obviously a massive event. If you've been reading any of the media online, whether it's newspapers or Reuters, you will see this sprayed across everything you can get your hands on. Now, it is the biggest event. It affects all financial markets. Obviously, it's the epicenter of all central banks. So it is very important for everyone. Now, for those new traders, I would advise even get onto the Federal Reserve website, have a look around. This is how you're going to start building your knowledge around the event and get familiar with the way they release it. So just coming over to the main site, you can go into the monetary policy page here, go into the calendar, about the FOMC, more details. A great idea to do before the actual event is actually read the previous minutes and statement for that matter. It will give you an exact idea of what their tone was last meeting, and then also prepare you for what they could potentially be going forward to. And this is very important for this one, primarily because it's widely anticipated that they will raise rates. I think it's last time I heard it was like 95% factored in. Okay, so the decision around this event will be, as you can see up here on the screen, 1.125 is the expected Fed target rate. Now that has been factored into the market. So when it comes time to the release, don't get all excited. You'll have your, for instance, your major currency pairs up here. Don't get all excited and start buying US dollars willy-nilly, right? It's really going to come back down to the statement to find out what their forward thinking is on rates. Okay, because the interest rate hike is already factored in, it will sort of probably have like a 20, 30, 40 point spike, but it will be the key components of the statement that the market will trade against. And this is why you don't want to really be using pending orders if you can help it, right? Putting orders both sides of the market, trying to capture that move. This is not the event to do it. Okay, you can do that on a single data release perhaps. There's a bit of risk involved, but this event, you do expect 50 points higher, potentially 100 points lower, and then maybe a 200-point rally. Another key feature of these central bank announcements, generally, if you've heard me before, I would generally say on a really good day where a currency's had a really good run, you get about 150 points on average, okay? And the currencies haven't been doing that much of a range at the moment leading into this because it's such a big event, except for obviously the dollar CAD, which you can see here has gone a little bit Barry berserk. That's once again on clear notice from the Bank of Canada, another central bank, that they are looking to raise rates. And that's why that's the sort of move you can get on a relatively subdued comment. So imagine when we do come back to the Fed, okay, if they do come out with some really tough talk, like, yeah, we're going to raise rates again and we're going to go, aggressive, you'll see a 300-point move here easy. Now, I don't expect that strong rhetoric from the Fed, though. What I am expecting is a rate hike, okay, as everyone else is. And then what I'm expecting is from the Fed is from Janet, basically around the statement itself, more of a softer tone, okay? What they have is, don't forget, 2 weeks ago or 2 Fridays ago, we had the non-farm payrolls, really crap numbers. You've got to say it how it is. That doesn't slow down the expectations of a Fed hike here, but it does slow down the future prospects for interest rates or higher interest rates going forward later in the year. They were expecting another one, 3 this year. They've already had one. This would be their second, so they're looking at another one. If we get a run of strong data, then the market starts to factor in a potential 4th hike this year. I think what they'll do is they'll take time out, say, okay, here's your rate hike. We're going to see how everything goes. Maybe one more later this year, okay? A softer tone. Now, what that will give us, I think, is a really good opportunity, and that's where I think they may sell US dollars, right? You want to have a general opinion of what happens, if a certain event happens, okay? And it's not really putting all your eggs in the basket. I'm not saying it's 100% sure, but I'm going to prepare myself to trade for a softer tone Fed. Now, what that means is potentially euro back up to 113. It will definitely give us a good opportunity to get short sterling here back towards high 128s potentially. Okay, don't forget sterling. Well, I shouldn't say don't forget. It is going down. Okay, they've got a huge amount of political issues coming up with Brexit and everything else. It looks like it's going to be as messy as you like. So sterling, I think lower will be limited to how far it goes. Aussie and Kiwi, these two things have been quite dormant. I think we could potentially see 150 points easy out of both of those currency pairs. Dollar yen down towards 108.5. Now, dollar CAD is already drifting low. So you give this thing another kick in the guts, it's going to be at 130 the figure before you know it. Okay. Already covered sterling. Euro, I still think the ECB are a bit soft. So I'm not expecting, a huge amount out of that currency pair. So that's my expectations for a rate hike and also a softer tone. Now, there's no point for them to come out more aggressive. Okay, the market's already a little bit nervous about the high rates as it is. So just be aware that that the expectations for them to be aggressive and saying, we're going to go again and again, we're going to and Janet to beat a chest. Well, that's not going to really happen. Now, also, if you don't forget, so the announcements come out, the interest rate decision itself, okay, 4 a.m. Sydney time. The what you will find is the press conference is 30 minutes later. So you may see Janet actually stepping up to the microphone. The currency may have already gone. Okay, it may have already moved. Now she gets her chance to put her spin on it. So don't put all your eggs in the one basket. She can come out, not really contradict, but smooth over. If the market moves aggressively, she might come out and say, I think you guys have got it wrong. Okay. It's rare that they do that, but you never know. So just be aware it's not over until the press conference is finished, and then the event is over. So there's it's a double barrel rollout with a half-hour gap in between. So potentially 2 trading events. Now, also just leading into this, don't forget there's a few key releases coming out prior to the FOMC. If I just scroll back up here, you'll see the climate count change. Right, this is a massive event. What you will potentially get is, sterling, which is sitting quite precariously. Okay, there's a little bit of a top here forming, as you can see, around 127, sort of 60. And I was sort of banking on selling here yesterday, but it's taken all day to get here, and now it's just stalled. There's going to be a bunch of stop losses above 127.60 or even above 127.80. So just be aware of that. And, if you have got sterling positions, we do have, obviously, the employment data. This is super aggressive data. Okay, the claimant count change is the main part of it. You've got the rate. And then also don't forget the average weekly earnings. There's a number of components here that you really want to be focusing in on. It's a big week for UK data. So really disappointing, if anything, that the election was on last week, because it screwed up this week of trading as far as sterling is concerned. And don't forget, we have just come out of a really strong CPI number yesterday in sterling. So the bias is topside. Another strong employment result. Sterling will already short squeeze and take out the shorts. It'll be above probably 128 before the Fed. And then it's going to get really loose. All right, so that's sterling. So keep an eye on that. Now, coming back to the rest of the major currency pairs, okay, they are sitting a little bit dormant here at the moment. Now, as we go into this Fed announcement, of course, we do have the UK data. There's some peripheral Eurozone data as well. But we do have the heavy-hitting US CPI and retail sales figures as well. Now, these are, once again, it's a shame they're not on separate days, all of them. Putting 2 big releases on the same day really sort of takes away the number of trading opportunities we have. So it would have been great to have the FOMC on one day, the next day the CPI, and then the next day the retail sales. That's perfect. But as it is, CPI and retail sales coming out at the same time, sort of 5.5 hours before the Fed. Will the market move on it? If there's huge variance, they will. But you know what? This event, the FOMC meeting itself and the announcement and the statement supersede all of these. So the market may actually just brush that data and just sit pat. Okay, wait for the result. Once the result comes out and they digest what the Fed has said, okay, now they'll come back to those numbers and go, you know what? Those numbers were weak. Okay, that's on the back of the weak non-farm payrolls a week and a half ago. Well, you know what? The Fed's got some work to do here. Okay, so, or if they're really strong, it corrects that negative move on after the non-farm payrolls, and then it really comes down to the statement. Okay, so as you can see, this is a pretty muddled event. Now, if you haven't traded one of these events before, okay, I'd just say watch it, okay, or trade on a demo account, and you'll see how aggressive these currencies can go. Now, as I said, I think the US economy is in a little bit, it's not exactly fragile, but, you know, it's not exactly going bananas. So I can't see the Fed going super aggressive. So once again, wait for the statement. And if they're not, you know, hugely variant, if she doesn't come out and say like, you know what, we're going to wait, it's all, you know, doom and gloom or whatever, you know, if it's pretty normal, then you may see the US dollar just sort of go sideways. We'll see 50 points up, 100 points down, 50 points up again, and we're back to where we started, right? That can happen as well. But what I think we'll see is the Fed trying to signal to the market that they are done for now. They may be one more later in the year, or they're on track. And I think that's a negative for the US dollar. The current numbers are weak. They're not aggressively looking for another two rate hikes after this. And I think we'll see the US dollar drift off, and we'll see these currencies rally. Okay, that's my hit prediction. All right, guys. Well, all the best. We'll see you in the live trade zone. Good luck with the event. Cheerio.